Hey everyone, welcome to another video. It's Friday afternoon here in San Diego. I decided to do my Sunday pre-session markups this afternoon. So I spent the morning kind of just going through doing my markups, putting notes and everything. And what I wanted to do is to go over all of those notes. So instead of what's typical as me going through doing the markups with you, I already took the time to put the notes on here. And so what I'm going to do is I'm going to break them down so that they make sense. This video hopefully will be a little bit quicker than the other videos, but you'll have an idea of what I'm looking for when I sit down at the chart on Sundays to do my session markups. The idea behind this is to create a bias, a typical or expectation of what the current order flow is and what it will be like for the upcoming week. So we're going to go over from the monthly, the weekly, the daily. We're going to use the 8-hour, the 4-hour, the 15-minute, and the 5-minute. And so those medium to lower time frames are more to give you an idea of what I was looking for. But considering that the market's already closed, we're going to have to wait for Sunday when the market opens to see what actually happens on those lower time frames and medium time frames. But at least this video will show you how I do this. So if you had questions, hopefully this will answer some of those and give you an idea of what I'm looking for. If you have questions that I did not answer in the video, you can leave them in the comments and I'll respond to them. Alright, so let's get started with this. So here we are on EU on the monthly time frame. You look to my right side of my screen. Here you can see my object tree. If you don't already know how to access this, it's on the bottom right corner. And I'm also going to have the interactive chart for this linked in the video. So you can go ahead and open this and sharing's on, so you'll be able to activate this and go through the markups yourself. So first one's first, we're on the monthly time frame. So we want to keep an idea of what is the most recent monthly swing that breaks structure. Now, obviously, for the last more than over a year, we've had that price action has been bearish on EU. And so what we can see is the most recent swing from this high to this low, we've broken structure to the downside. Now, this would be the low that we broke. And so this is where the monthly breaks. You see that we do close on the body of the candle. So that's showing strength and commitment to that downward bias. And we could probably see some continued commitment. Now, we also have to understand what caused the break. So looking at this swing, we can see that this is where the break actually occurred. Now, when we're looking at where the break actually happened, usually there's going to be some sort of pause or reaction to the extreme that it breaks, right? So this was a previous low that took the highs internal, right? Price action, because the actual swings from up here, right? So we took some liquidity here, we made that high, and then price pulls back, gives a reaction to these order blocks in here, which is basically this area of the extreme. That reaction fails to take that high, and that causes what? A break of the lows. Now, just before that happens, this is where we have the actual candle body break. Here we have the pause. So inside here we have this red, which is an inside bar. That's the color that I use for my inside bars. If you don't know what the indicator is, you can look this one up if you don't already have it. And so this is where we paused. This candle here basically shows that the high and the low range of that candle is inside of the previous candle to the left. That's why we call it an inside bar. And many people like to refer to inside bars as lower time frame ranges or consolidations before a breakout. So this was an entire 1 month candle that closed as an inside bar before we actually broke out. So there's a lot of liquidity here that price could come back to be attracted to. So that's what we're looking for there. So next we're going to go to the weekly time frame. And here on the weekly time frame, we can kind of view what the monthly looks like in terms of with now weekly candles. And then what we're going to do is we can see here that this is where we had the reaction to that low. So before we took this bottom line here, which was the previous low, you can see here, we had a reaction here that pushed price higher. Now here you can see what we did is we tapped back into this buy to sell wicks that were engulfing to the downside, right? So we didn't take anything from here, but we came back to mitigate that. Price had an aggressive reaction. This buy candle was then engulfed to the downside, and price then pushed back to get what? Another reaction to this extreme. Now this one was inside of this one, so it didn't break that low just yet. We had a final interaction with this demand. Price pushes up, fails to make a new high. Here we have a small consolidation. You can see these wicks travel higher than the previous, right? Relatively equal highs, some trend line resistance here, and then price breaks to the downside. Last interaction here that are the wicks before it breaks out. So this is what the monthly looks like, and when we go ahead and turn on the weekly, and we can actually now hide the monthly, this is what it looks like. Now, there's no need to really build up the price action and the markups from all the way months past. We realistically only need the current swing and the previous range, right? Usually that's what I'm looking for, because a lot of times if price does not come back to mitigate a well-priced POI, it can still be used as structural inducement and price can still travel higher. Now, turning back on the monthly, we do see that this is where we broke to the downside. Price came back and it tapped the bottom of the range, but it did not mitigate the actual weekly POI. Until we tap the 50%, I still consider it unmitigated, as well as the monthly. This area here has not been mitigated. So price could come back one day to mitigate this area, or even to mitigate this actual POI that has a imbalance between it before continuing or reversing, right? So because this is where we actually have that break, so just keeping that in mind. This has not been mitigated, but this is the area that directly caused the buy to sell wicks that broke out from that weekly low. So this now is going to be used as inducement. Now price can, and you'll see on the daily markups, that this is a valid supply zone that pushes to the downside. But seeing as this buy to sell price action doesn't break on body, we have this previous low breaks on wicks. Then we have to break this wick with a body. This one gets broken by another wick. Then that's when we get a pullback back into that supply, and then price breaks to the downside even further. So in my mind, on the weekly time frame, this area is a strong supply that caused a break. This would be used as inducement of liquidity. So I would expect price to come back up, and more than likely, instead of let's say to work with that one, I think it would sweep it. That's something that I look for. Now on the daily time frame, our markups are going to be more refined, and so we'll use different zones, right? But at least on the weekly time frame, that's what I'm looking at. Now the most recent swing was this low to this high, takes liquidity, mitigates to the left, and then breaks to the downside. So what do we have? This is an engulfing candle to the downside that breaks structure, full-bodied candle closure, opens back up with a doji showing some indecision. Price does not know what it wants to do yet. It has to decide. So more than likely, price needs to regain some liquidity, some fuel for continuing to the downside. Price pulls back up into this area, which, using this low here to that high, you can see that it did tap into that. Now at the same time, this reaction to the bottom of the range, or let's say to the lower part of this doji candle, it failed to break the low. And so that tells me that this high is weak. It structurally failed to make a new low. So this is more than likely going to be used as liquidity. So same as the story above, right? I think that price could come in to either sweep that or come into higher pricing before it gets that reaction. But if price does create some sort of reaction here, I understand that I would like to see this taken first. I do not want to see price. I do not want to take shorts from here to the downside because they're low probability at the current moment, right? So that's kind of what I'm looking for on the weekly. Now, if I turn on the daily, here you can see that I have some markups here. For example, we have this area that has a lot of daily zones that I could consider, right? And obviously it takes a lot longer for a weekly zone to be mitigated than daily zones as well, but that would require price to shift bullish temporarily unless it sweeps this POI into that zone, right? So keeping that in mind. Now here, you can see that this high and this high would be used as inducement of liquidity, and you're going to actually see that on the daily time frame. So once again, let's go click on the daily. These are the weekly markups that are now going to be added to the daily. So you can see that, for example, this is that first reaction to the bottom of the range that actually it failed to break to the downside. So in that case, that's what I'm expecting to get taken out. Now, if I add the daily, here you can kind of see a little bit more information, right? So this daily break of structure to the downside breaks on body. Price here is kind of messing around building some sort of range, a lot of liquidity here. Price then takes the lows, takes the highs, gives a final interaction with this zone before breaking to the downside. And so as we know, this is the flip. This took liquidity, relatively equal highs here, swept that liquidity, right? It came in to mitigate what? To make equal highs almost with this flip zone that committed to the break. So this area is strong as it committed the break to the downside, but we also have an imbalance above that. So we always want to be cautious on any time frame, especially if there's a higher time frame imbalance above price. Green in this case is going to be used to indicate when we see imbalances or an unconfirmed zone. I use those as reactionary zones. So more than anything, it's not a zone that I'm really focused on, but I'm aware that if the right thing happens in that area, I could take that as a medium probability type of situation. So not preferred, but potential. So I'm going to turn off the weekly, and basically what that hides is this entire range and the one above. Okay, so now what we can focus on here, looking at the daily time frame, is we know that structure on the daily as well as the weekly and the monthly is bearish. This was the last break of structure on the daily time frame. We have this high, which is the extreme point, that came back to mitigate premium priced territory. That's the 50%. From that high to this low, came in to take out that 50%. So it did give a valid reaction in premium pricing. So in that case, in my mind, now what we have is the most recent leg from this high to this low. Now you can see that price came back to mitigate above 50% as well. We also see that the daily break of structure, the next one, the most recent one, is also around that 50% territory. So keeping that in mind, I have to understand that because of the higher time frames, if price is going to continue higher, then this area is more than likely going to be swept, and that's when we can come in to either give a reaction to this imbalance, or price is going to come into these actual daily zones, which are valid for continuation to the downside, right? So we can get a reaction to any of those. This would be used as liquidity, equal highs. So that makes sense. Looking at the most recent leg, we have the daily break of structure to the downside. We have this range here, which you can see sweeps some internal liquidity here before committing to the break. We have, this is the last bullish candle. Then we have bearish, bearish, break on body, and then continues lower, right? Very aggressive, long push to the downside. So in this case, the flip here that caused the break is what generated a reaction. So price came back in, tapped this. Now what's the expectation? If supply is in control, this supply is strong because it caused the break, the expectation is that this has to happen. And because that did not happen, because this supply did not have enough liquidity to push price to make a new low, that tells me that we have to come up higher in price. So what I'm going to see this as is a higher time frame flip. So this was a supply zone that broke structure to the downside, price came back, mitigated, created a reaction, an extreme that took liquidity, and then what's going to happen? That supply is going to turn into demand, and then now price will come higher. So the minimum expectation now for me is that we are going to take out this initial reaction to the supply. So this would have to go. And if this goes, that means that this area that it reacted to also fails. Now price did come into relatively close or to the 50%. That would be the 50% of that POI, but if we use the actual range from this low here to that high here, you can see that we did tap the 50%. So price could, in theory, sweep this before pulling back, but it's unlikely that this is going to hold. So in my mind, these two levels are going to be inducement of liquidity and will be taken out. So I'm expecting price to take out these highs, but on a higher time frame, I'm also expecting price to take out these equal highs. So I would be safe to look for longs right now to take price to those levels, even though it's counter trend, just based on the reactions that I'm seeing. So at the current moment, because we know that this is where we had the reaction to supply, this is the end, this is basically the extreme of the reaction. We push higher. I'm expecting that if price is going to pull back, it doesn't have to, but if price is going to pull back, then ideally I would like to see this level tapped. And we do have inducement, that point of liquidity here that has failed to mitigate the actual extreme, that swept liquidity here. I could expect something to happen where price comes into that before continuing higher. Now it doesn't have to, but it could. Price could also create a new daily demand zone here. So we'll have to see if this high goes. But at the current moment, that's a daily. So expectation is these will go, and the next expectation is that these can go too, and price can sweep into this level or into the actual order blocks above. We do have imbalance here as well. We have a big imbalance here, right? And this is where we have equal highs. So we have to understand that that's an option. So once again, price can drive up into here. Price can sweep this high, fill the imbalance above, and then drop, or price can also mitigate the POIs above, right? This would then be used as structural inducement as it created a break of structure to the downside. So those are my notes. Now let's turn on the 8-hour. So these are 8-hour, and some of them are going to cross over to the 4-hour. So they're both, and you're going to see that in the next setup. Okay, so daily on, daily off. You can kind of see here, if we look at these areas, this is a daily zone, refined to the 8-hour, daily refined to the 8 hours as well. So let's go to the 8-hour time frame so you can actually see those POIs a lot more clean, right? So we know that this is going to be a refined one. This is going to be refined. You can see that we're able to cut off some of these areas because of that, as well as some down here. This is a daily reaction zone where we do have POIs that are visible on a lower time frame that are much better. Daily refined to 8-hour. These 8-hour levels are daily relative equal highs, liquidity for pricing above. So you can kind of see that. And then down here we have an unconfirmed strong demand zone. Order flow shifted bullish from here, right? But has yet to break anything relevant because the high is here, the low is there. This is where we had a flip. So this has basically the swing is from this high to this low. And this would be a smaller, minor swing from this high to this low. And we have yet to break that. So price could just flip around from here and fail. It could. I don't think that will happen, but it very much could. So let's hide the daily notes and the daily markups. And we're only focusing on 8-hour right now. So here's what we're going to do differently. Here you can see that 8-hour, I've basically marked out areas where we have breaks. So in this case, for example, this high, you can see that, well, let's start to the left, right? So this is the lowest point. This is the highest point. We break the lowest point here. So this is one big 8-hour swing that breaks structure. Price then creates some sort of range. You can see that on the daily time frame by all those massive wicks here that kind of don't make any sense. Here what we do see is this wick moves higher. This one's higher than the previous, so higher high, but then price fails and takes out some liquidity here, but fails to make newest low. So each of these are still higher lows. So this is kind of some bullish order flow. But then what we have is price then fails to make a higher high and makes a lower low. So this high is strong as it creates a break to the downside, right? And then this low point takes out that strong high. So then this is considered strong, makes this peak up here, and this is when price dies off and breaks structure on the 8-hour to the downside. So this is one big swing, right? Now we do have internal order flow here. In terms of this was a previous wick low, you can see that we have candle body break and close below, right? So we could choose to mark that out, so this high takes that low of that wick, right? So this is a wick that takes the low. And price pulls down, takes the low again here, and then this low takes out that internal high. So order flow here on the 8-hour shifts bullish. Now, not too important because on the 4-hour it'll be more obvious, but just to keep in mind that structural expectation is bearish, but the order flow had temporarily shifted bullish. Now here we have this low, right, that makes this high, and this high takes out that low. So that tells me that this high is strong as it broke this 8-hour order flow low, right? Made relatively equal lows, kind of swept a little bit. You can kind of see that it's still, swept the sweep a tiny bit, but I can see that as liquidity because we do have an imbalance below. And then price explodes to the upside, shifting order flow bullish temporarily internally, right? So this is internal price action. This is the pullback phase. Now the pullback phase can turn into a swing, but it would have to take out certain particular levels, right? Because at this current moment, we could say that this is a valid area for shorts. But I do not think, based on the higher time frame, that this area is going to hold as a supply. Now it could, absolutely is probable that it does hold. You know, I'm not going to necessarily, I can't predict the markets, so I'm just giving you my thoughts, right? So what I'm going to do is I'm going to go over the swings, the relative swings. So obviously I'm redefining the POIs here. I'm defining what I'm looking for in this swing, and then what I'm looking for in this swing as well. So what we're basically looking for is anything that has not already been mitigated, right? So at the current moment, for example, from this high to this low, this is an internal push to the downside that sweeps the low, right? So anything underneath here isn't really relevant at the current moment, because we're pushing order flow bullish, right? So I'm looking for anything above current price action that has not been mitigated. This is a strong flip, reacts to that doji candle here, forms an extreme, breaks to the downside with commitment, right? So we have a nice order block here that's visible and has this area as inducement of liquidity just below the actual POI. So in my mind, this is an 8-hour zone above this point of liquidity that is weak, because this has failed to break and close below this low and below this low and failed to break this one. So, you know, we're not there yet, but this is above price action. Now, inside of this swing, right, we also have the extreme. The extreme is always going to be valid, because we could always look for price action there based on reactions. Volume, for some reason, could enter the market at these levels, and this is at 0.998. I think it goes all the way to 1.0. So at this peak wick here, this is just at the 1.0. So, you know, very important zone based on, you know, price for it to surpass the 1.0 mark again, right? So these are two price areas of price action above. Now, if we look higher than this swing, then we have to see what is above this structural high that has yet to be mitigated. If we look to the left, above this high, we are no longer looking at anything here because all this has been taken out by price action to the right. But this area has yet to be mitigated. So in here, I immediately notice what? We have an imbalance. We have an order block here that swept liquidity. So this took the left, liquidity to the left, took out these buy to sell wicks, took out this price action here. This failed to make a new low. So this is the last buying before the selling. So sell to buy, sweeps liquidity, and then it gets engulfed to the downside. We have that imbalance, which basically gives us more confidence that this order block is valid. And we also have this wick high, and we have this wick high, which are equal highs. So that tells me that we have what? An order block that has enough liquidity that left behind an imbalance, has equal highs above or just below it. So if price is going to hold at this area, price could come in to sweep into that green zone and give me, let's say, a signal to basically short from there. Or price can come in and fill in that imbalance and tap the actual POI above. That's what I'm looking for, right? Now, above here, what else do we have? Because we're still looking at the previous swing. This is the break of structure, so from this high to this low is the swing. So above here, we have what? More imbalance. Now, we could argue that some of this imbalance can be filled from candles, a couple candles behind, but usually we're looking for the immediate candles, like the one just prior to that and the one just after that. In this case, this wick high swept liquidity, filled in some of the imbalance, but leaves behind what? Enough imbalance above that if price is going to come up to this level, we might get enough selling happening. We could generate a reaction to that, but eventually price is going to want to fill that level. And so very likely price could come up to this area to fill in that imbalance or sweep that imbalance and tap the order block at the end, this extreme, right? So I'm keeping that in mind. So basically what I'm looking for is every strong swing that breaks, and I'm looking above those structural highs for more inducement, more liquidity, better quality order blocks, higher probability zones to sell from. And I'm trying to match those with daily higher time frame zones, right? Because looking, if we print on the daily again, this is an unconfirmed daily zone. This is the daily zone that we already reacted to. The next daily zone isn't until up here. So there's a high chance that price could travel much higher than we expect, which is why it's important to understand where price can potentially go to. Now, you don't have to do all of these markups, but what it does is it gives you a lot of clarity in terms of what's possible, right? So we're not in shock. Now, Above this imbalance, we do have that extreme wick that also sweeps liquidity, fails to make a new high. So this filled in the wick to the left just before it. It swept this liquidity in here. So this is an 8-hour visible wick. That is where commitment entered the market because price was kind of ranging in here before what happens. It sweeps up and then so much volume entered the market that it left behind a wick and it engulfed extremely aggressively like that. And then stopped, paused, and then continued to break to the downside. So that's this swing, right? So we're looking at, first of all, this swing that's internal, this swing that's internal to the left as well. We have this 8-hour break of structure to the downside that has the lowest low at the current moment. Everything in here is internal to this swing. So it's very likely that price could come up here without shifting this 8-hour bullish temporarily because this is the actual swing. So all of this can still be filled in without turning the higher time frame bullish, just the order flow bullish, but not structurally, right? Now, if we look to the left, what do we also have? We have these zones above. Now, unlikely that price in the near future will move, let's say, almost 400 pips, 350 to 400 pips, you know, in a counter trend move, unless this is a higher time frame pullback, right? So, for example, if you look at this candle today, on the daily time, on the 8-hour time frame, sorry, this is 100 plus pips, very aggressive to the buy side. Now if we count this low to here, right, that's like 160. So think about it like this. In 16 hours, 160 pips were pushed higher. This is very explosive, especially for seeing that what price is favoring shorts. Look at the short move to the downside with all that commitment. This is a short move to the downside with a lot of commitment. This one, short move to the downside with strong commitment before we range and then we pull back, right? So this could be an initiation of a higher time frame pullback that's visible for a daily or weekly goal, right? And so if that happens, temporarily we're going to see a lot of aggression entering the market, just as the same way that when we see it when it's pro trend, it can do the same thing because that's in alignment with all the higher time frames. So this could be a temporary zone for reversal that might be necessary to pull price back up a couple hundred pips into a previous weekly or daily range, right? And as we know, these are the weekly zones. If I turn that back on, this is a weekly zone and the one above here is a weekly zone. So very likely price could come to those areas if it's a weekly pullback, right? So back to here, looking at this area here, this was 2 daily zones. So this was 1 daily zone, this was another one. So here we could refine that we have an 8-hour imbalance. So here we have the wick here and the next wick. This is clean price action pushing through. It's an easy flowing market there. And we left behind that inefficiency that could come back to be filled. Price could come back to fill that specifically or go to the inside bar just above that. That's an 8-hour order block that gets engulfed. So that's important to note. This is the source and the origin of the shorts. And this is the area that needs to be filled. More than likely, price will come to the order block, but if it doesn't and it gives me what I'm looking for in that imbalance, I can take a medium probability sell. As well, we have this extreme. This was the last buying that failed to make that high. Price paused here. We do have an imbalance visible on the 8-hour as well. You can see from this wick to that wick, we have an inefficiency that directly breaks structure to the downside. We break on body, right? So price could come into the order block above and to here, or it could come into this area here as well. But the actual zone that I'm looking for is to basically sweep this area here. So price could come in, tap that, give the move, or come up a little bit higher before shifting bearish. So we could see something like that happen. So at the current moment, that's why I have the 8-hour. Now, if the question is why am I using the 8-hour instead of the 4-hour? And it's because a lot of times if price action isn't super clean on the 4-hour, I can use the 8-hour to consolidate larger amounts of data because it takes 2 times more data. So think about it like this. If it's a clean, visible 8-hour, then on the 4-hour, it's going to be very easy to narrow it down because to go from a daily zone, let's say here we have this wick, right? But not necessarily a clean one. This is just the last point that in order flow or liquidity was injected to engulf to the downside. Here we don't really see too much. Here we don't really see too much. It's just kind of that last part of the wick. We have this big imbalance. It's not very clean, right? And if we went to the 4-hour time frame, some of them will be clean, and that's why they overlap. I have 8-hour and 4-hour. Like this one, it's the same, right? But in other cases, sometimes you won't see that. For example, let's look at here. This 8-hour zone, we could have 2 4-hours. So we could have these buy to sell wicks that were not engulfed, but this is the last area. This is the last zone before we got engulfed. So this area could be valid. But we also have 3 equal highs here on these wick highs. That price could come into that order block there as well. And so it's like, sometimes it's easier. For example, here, this 8-hour isn't as clean. This is the last candle before the engulfment, but on the 8-hour, it looks much cleaner than on the 4, right? Same as this imbalance here. Here, we don't really see the imbalance as visible. It's much smaller between here. But on the 8-hour, we can very much consolidate that data to have a much cleaner image, especially because we're looking back all the way until August, because we really want to have an idea of what's happening. We're not just looking at this, because I'm building it from the higher time frame, monthly and weekly and daily. I need to look at more data in this case. So for me, it makes sense. Now, to go over the final notes on the 8-hour, this is an extreme. The extreme is always valid. I do have equal high or equal lows here, relatively equal lows. This one did sweep a little bit, but this can still be used as inducement. We have imbalance here as well. Now, I haven't labeled it on the 8-hour. I labeled it on the 4-hour. You'll see. But price could come down and tap this zone. And because we have inducement of liquidity, if price was going to go long, we could see price initiate longs from that level. Now here, I'm considering this an unconfirmed strong demand zone. And the order flow here shifted bullish, right? So this was bearish price action. We took out that 8-hour, this strong low that took out the high. Price came down, tapped here, swept a little bit. This is a very large 8-hour candle from that wick to here. This is basically 125 pips. That's too large of a zone for me to focus on. So what I'm looking at here is that in this area somehow, probably toward the extreme that swept something, this is where order flow shifted bullish temporarily. This is where we opened that candle and exploded up, right? So this area here on the daily is visible, and on the 8-hour, I'm calling it an unconfirmed demand zone because structure is still bearish, right? So the actual swing from this high to this low, this is the only one that actually made that low. This high has not yet broken the low. So technically speaking, as we mentioned, this high is weak, and this needs to probably get taken out. So anything here is basically a weak push to the downside. I expect it to go. So if price is going to pull back, because my expectation is that this high is weak and it's going to go, I could take longs from these areas if presented, but I'm not really looking for that because I still understand that if shorts come into play and volume and commitment enter the market for supply, because one of these zones actually is meant to hold, even though this showed some weakness, then this area will get blown straight through because there's no reason for it to hold at the current moment. They haven't done anything. The swing from this high to this low hasn't taken out anything that's relevant. So in my mind, considering that, we've broken here with some wicks and that's it, we shifted bullish order flow, we have inducement for this extreme, which is why if it swept into here and I got a 15-minute bullish confirmation, I might take longs. As well as we have this 8-hour POI. This is a doji candle that got engulfed, but what has it not done? It hasn't really done anything. From this high to this low, this high failed to break and close below that low. It somewhat swept it. We have relatively equal lows. This high is technically weak. So I'm not expecting it to hold the same way as I'm not expecting this to hold, right? So there's a large injection of volume that entered here, but the POI doesn't have any inducement. So in my mind, I would actually expect this to get swept. Doesn't mean it has to. That's why I'm expecting for a reaction here. Price could come here and then 15-minute shift bullish, give double confirmation, and then go long. But it could also sweep and then give potential longs here to go higher, right? And that would make sense to me. So that's just something I'm looking at. And as I said, this supply can trigger shorts. If the high goes, we also confirm the demand zones below. Makes sense. This is used as inducement as this is weak, as it failed to break the low. I'm expecting this to go. So when this high goes on this 8-hour, I am potentially looking for shorts to realign price, either to take price to here or take price to here, right? Now, if the higher time frame needs that pullback, it's not going to really do too much. and we will come up higher to fill those higher prices, right? So just keeping that in mind, the importance of understanding what POIs are strong and which ones are weak will really give you an idea of the direction. Because if you're looking at the daily and the 4 hour and the 8 hour, or whatever time frames, the 1 hour you're looking for, if a point of interest is weak, more than likely it's going to fail. The probabilities of a weak POI holding are very low, and so the expectation is above 50% if you think about it, that it's going to be taken. So we can use that understanding that if it's a weak zone, it's a very easy first target for us. And so ideally, if I could have, I would have taken longs. I didn't trade today. I would have taken longs up until, ideally for me, up until this zone. That would be a very clean expectation for me that I think would be high probability, right? So this daily we already went over these areas. So all of these have imbalance, which increases the probability of their success. And these specifically have inducement of liquidity. We have this area, it kind of disappeared here from a different time frame, but we have these highs. That's inducement of liquidity here, equal highs. So I'm just going to add that there. Awesome. Okay, so now what I'm going to do is I'm going to hide the 8 hour notes. These are 8 hour POIs that strictly only work for the 8 hour. And now I'm going to turn on the ones that are 4 hours. So you can see the difference. Some of them will be refinements of those 8 hours and make them smaller. For example, here, here, and here. So I'm going to turn off exclusively 8 hour zones. And that's what kind of keeps my charts a lot more clean. So now we're going to drop to the 4 hour. And here now we can see price. You know, obviously we consolidated a lot of data using the 8 hour that now we can kind of refine a little bit, because the 4 hour will give us an easier thing. The 8 hour makes it easier to navigate, but the 4 hour is something that usually we're going to focus on trading off of, because usually we can narrow down these zones, right? So here I did not decide to basically narrow this down to the 4 hour. We've already received a reaction to the bottom of this range. There's a very small imbalance, so in my mind this is the last buy candle. It makes that high. These two wicks here failed to break that high. So in my mind, this buying price action, there could be something that happens here, although I don't think it's going to be high probability. Now this 8 hour zone as well, on the 4 hour is basically the same thing. It's the last candle that gets engulfed, right? And so we have a range here. This is a selling to buying. You can see that this wick basically slightly takes out those highs. Then we have the sell to buy. So instead of doing a 4 hour and going like, okay, here's one 4 hour zone, whoops. Instead of doing this, let's go here. Instead of saying like, oh, we have one POI here, and then we have one down here and leaving behind the middle, the 8 hour was clean enough that I'm just going to focus on that. If price does what it needs to in this area, then I will consider it. At the current moment, order flow is shifting bullish, and so I'm looking to see where it's going to, if it's going to continue higher or if it's going to fail. So at the current moment, we're looking at, this is where price is. So the most recent or nearest POIs to price, this one is not strong, as this has failed to break to the downside and close below. So I'm expecting this to go. So the point of interest that's valid, that is yet to be mitigated, that is above this weak high, which would be inducement of liquidity, would be this area here. This area here has generated a reaction to the bottom of that range, but it has yet to really tap into the 50%. So price action, what am I focusing on for price to approach? It's magnetized to this 8 hour zone, which inside there's 2 4 hours here, but I don't want to get too preoccupied with 2 zones and then have 2 times the potential trades. I will just be patient. If I look below price, we have this 4 hour. This is what took liquidity to the downside. V-shaped recovery, very long wick left behind, and price explodes in engulfing manner to the upside. Now, because this has yet to break this high, in my mind, this is the highest point, this is the lowest point. If this high goes, then this is confirmed 4 hour demand. It doesn't have any inducement of liquidity, so I still don't expect it to hold. But if price returned here and gave me 15-minute confirmations, I would consider taking longs. But they are not the highest probability at the current moment. which is why I still think if price comes back, it could sweep this level, give you something in here, or maybe not even, right? So these are the two most closest POIs to price. Now, of course, because we have points of interest above, because my higher time frame idea tells me the price is going to continue higher, I'm always going to use the extreme. Now, one thing I like about this extreme here is this wick specifically sweeps liquidity internally here. So this was the buying push to the upside. We have an inside bar. Price expands to the downside, takes the wick low from here, from this candle here, and then price has a sweep before committing to the downside. Now, we do have an interaction here, a flip with this wick before it gets engulfed to the downside and pushes lower. In my mind, this stuff is not really going to provide too much. I'd be looking for the extreme as it swept liquidity. To me, it makes more sense that maybe that can hold. Now, I do understand that we have this inside bar wick high, and we have this wick high too. Both of these are relatively equal highs. I really don't think that this extreme will hold. If I got confirmation for an entry in here, I would take it for a temporary pullback to the nearest demand or whatever needs to be happened. But I do expect more than likely that those areas to be swept and this to be used as inducement. If that happens, then in here, I would be more comfortable looking for shorts to bring price lower, because this POI specifically in itself also sweeps liquidity. So here what we can see is this was the push to the downside. Price is ranging here in consolidation. So here this high fails to make this low, right? Fails to take that low. Price pushes back, this is internally, and then takes out that low. So this high specifically took out this low and this low. So relatively equal lows here. This high took that out. So this is considered strong. There's no inducement, so price swept those highs, took out that liquidity, reacted to those wicks here, buy to sell wicks that are the final interaction in this area before continued to commit to the downside. Price takes this liquidity above, mitigates, fails to break to the downside. Demand is holding right now, takes the high, but doesn't close above, it sweeps it. That sweep indicates what? A failure to close above. It shows weakness and like pending shorts. You can take shorts from this area. Now it fills some small imbalance here, but it still leaves behind this massive imbalance that's visible on the 8-hour and the 4-hour. So what happens? We sweep liquidity, price pushes down. Here we have some doji candle that also sweeps again before committing to a break. And here you can see this candle is engulfing to the downside, takes this low, gives a reaction to this extreme that was strong, that took the highs, right? And in here, this is the interaction that's a flip zone that actually broke structure to the downside. So in my mind, because this swept liquidity and committed to the break, this is the extreme of this internal swing that broke external structure on the 4-hour. So broke, made a new low, and then continued to the downside. So in my mind, we also have a small imbalance here, which is very hard to see. But we have this high and this high that can be used as inducement for this POI that swept liquidity. So it's a liquidity POI, much higher probability for me to hold, right? So I can very much see the price magnetize to this level. As well as I look above, this is an 8-hour visible, 4-hour visible POI. Buy to sell engulfing, sweeps internal range liquidity, fails to make a new high, and then directly breaks to the downside with a massive imbalance. If price continues higher and does not stop at this zone, right, then what I would expect is price to come in to fill the imbalance here. If I get a short signal here, I might take it. Ideally, I would want to see price come into that level, because this area is where we had a lot of volume enter the market. Even though this failed to break the actual low, this area needed to basically consolidate range to make more orders for shorts. This is where it committed. If this area got swept, then this is what I would look for. As well as if I look even higher, we're looking at a next previous range. Here we have visible 4-hour, 8-hour imbalance. This is the 4-hour candle. That is the one just before it got engulfed. Price got engulfed and left behind imbalance. Same story here. This 4-hour here reacts to that extreme. This low, this demand, failed to make a new high. Price comes in, reacts, breaks to the downside. So this is basically where we have an interaction on the lower time frame. Swept these relatively equal highs here to the left. Same kind of story. Am I expecting price to approach all those levels? Not necessarily, but I understand why they make sense on the higher time frame. Equal highs here, we have equal highs here, we have this weak structural high that's ready to go and get taken out. So that's kind of what I'm looking for. I'm using liquidity, I'm using my knowledge of what is strong and what is weak, supply and demand zones, to basically create my bias and what I'm looking for. Now, if we turn on these notes, you can kind of just get a reminder. 4 hour and 8 hour are the same. This imbalance is visible on the same. This POI has two sweeps. We swept this wick high and then we swept again just before breaking. These are the same thing here. We have that imbalance to fill. Anytime that we see imbalance, price is magnetized to those areas. So high probability that something happens there. Let's turn off our notes and let's flash on the 15-minute so you can kind of see what we're going to look at. Once again, we're trading between this high and this low. So at the current moment, we have to tap one of those and we're closest to that supply zone above. Whether it's going to generate a reaction, it'll shift price, whatever's going to happen, we're going to be able to notice that on the 15-minute. So here's what I'm using on the 15-minute time frame. So at the current moment, what we can see is the most recent 15-minute swing is from this low to this high. It's basically taking out a lot of liquidity here. Now, I'm not going to go ahead and mark out all of the previous 15-minute ranges because I'm only paying attention to the most recent because this is in development, right? So at the current moment, we had this high, this low, we make a new high, price then fails, breaks to the downside. So price is bearish here, right? Here we pull back. What does it pull back into? This 15-minute inside bar that actually committed to the break. Here's where price then made that low. So this high took out liquidity internally. So took the highs in here, those equal highs, and then broke to make a low. So this is considered strong. When this gives that reaction that took out this 15-minute strong high that broke the low, that tells me that order flow is now shifting bullish because this is the current push up. And at the same time, that tells me that this low is strong and order flow could continue bullish. Now, ideally, what do we have here? Well, we can notice that we have a small sweep, right? Sweep of liquidity, V-shaped recovery, very aggressive, and we left behind a big imbalance. In fact, the imbalance is from this wick low to this one, and this is also a sweep as well. So we have all of this area that's in imbalance. This is the 4-hour zone in general, just so that you can see. So the 15-minute visible POI would be this extreme. Price could come down, sweep this inducement, and then come back to fill this, and then tap, and then continue off. Now, keeping in mind, what else do we have? We have a couple sweeps in here as well that we could consider. Now, one thing that I see is that we had this wick high, price pulls back. It does not take any of this liquidity here, but it does make a new wick high. So the way that I see this, how I'm observing this is, and I think this note will clear it up, this low took the 15-minute high, but it failed to close above. Price may not retrace to the extreme, depending on how, let's say, the higher time frame pullback it is. If this pullback is something that's going to be from a daily or weekly zone, price can be so impulsive and aggressive that it's not going to pull back this far, right? So we should look for a POI below this and use this strong low, right, in parentheses, as structural inducement. Because this low took the high, we would consider it strong. But because we noticed that it failed to close above, that shows us that this is actually weak. And so what we can expect is now this is setting us up for what? Structural inducement. So if we take out this low that's supposed to be strong because it took out the high, this is structural inducement. Now, here we have a lot of wicks and it's very hard to understand what's happening with price. So in this case, what we're going to look for is on a different time frame. We're going to drop to the 5-minute time frame so that we can understand what's happening. On the 15-minute time frame, we can go ahead and hide some of these things here. Okay, so we know this is the 15-minute extreme. Price could pull back that low, but it doesn't necessarily need to, as we know. Now on the 5-minute, what do we notice here? Look at that. So on the 5-minute time frame, we notice that this 5-minute POI is much cleaner than the 15-minute mess that was visible. We can see, looking to the left, what do we have? A buildup of equal highs. We have one where we sold from, right? Look at this. We made equal lows here. So strong selling entered. Price pulls back, respects that high, sells more. pulls back, gives a small sweep here, but sells even further. This is the point at which when order flow was taken over by buyers, and we shifted and we turned this into a sell to buy engulfing order block, and then buys to the upside, very aggressive, very clean, impulsive push, right? The supply has not been tapped, so demand is still in control. So buildup of liquidity, equal highs that were liquidated by the breakout. So this is a range. And so in my mind, what do I have here? This 5 minute does not have liquidity, as this is the area where we have that breakout. But because now we have this low that took out that previous structural high, even if it failed to break and close, it's considered weak, this low. So now what can happen? Price can sweep this. This now has 15-minute visible structural inducement of liquidity. So we're taking an entire 15-minute structure. We can tap into this 5 minute, and this 5 minute is very clean, and price could from here propel price even higher. We have the imbalance from this high to this wick, from this wick low to this wick high, this area just around here, as well as here if we wanted to count that. But more than likely this range, because this is the breakout, took some liquidity internally before exploding. This 15-minute structural inducement that's visible on the 5 minute is very clean. So price does not necessarily have to come down into here. Price can very well be satisfied with sweeping this, tapping here. Now, if price explodes on Monday or Sunday and comes up to here, supply is tapped. So what are we not going to do? We're not going to look for longs until supply is invalidated, right? But if supply is respected, we're going to be careful and we might look for shorts. If we're going to look for shorts, we could look for shorts to what? To this 5 minute, or for price to come back to fill the imbalance or the actual POI below before continuation, right? So just keeping that in mind, we have to remember that higher time frame POIs are going to hold better than lower time frame POIs. And so an 8-hour supply zone is going to be stronger than a 15-minute demand zone. And so we want to be very cautious and understanding that our expectations are realistic for whatever we are coming across. So hopefully this video made sense. I'm posting the markups on my Discord, so Ezra's markups here. So if you want to go ahead and join the Forever Free Discord, the link's going to be in the description. Hopefully this video was helpful and taught you a couple things about how I view price. These are my markups for the upcoming week. We're going to see what happens. Let me know if you have questions, and have a beautiful weekend, everybody. Catch you next time.